Welcome back. Hope you're having a good morning. Well, plenty of stocks to discuss and help us out with some analysis. Prakash Diwan joins us on the show. Prakash, we'll talk about IT a little later. I wanted to ask you first on Tata Consumer. It appears they made two very good acquisitions. The stock, though, is at a 52-week high. How would you approach the stock? It ended virtually at the high point of the day as well. How did you read that? Valuations are good. It's going to be adding revenues. Margins are better. Big scaling up opportunity as well. Your take.
Good morning, Nigel. So I think while the fact that this acquisition was in the making was known, what's important is that the valuation at which the deal has been struck, the transaction has been consummated, is absolutely a win-win. There's no, seemingly there's nothing of an element of unfairness on both sides. And for Tata Consumer, it kind of ties in very well with the strategy to increase the share of the pantry, as they mentioned some time back. And this is something where you have business, the brands, products which are anyways flying off the shelf. It's not something which they'll have to invest energies and time and resources into, which means it helps them get top line. The kind of reach that they already have with the acceptance of the brands will make a lot of sense. And it also starts giving them the footfall, giving them the footprint in segments which probably are still very nascent, especially on the culinary side. If you look at sauces and soups and all of this, this is something where a lot of the multinationals have been very dominant, and that's where they'll able to make some inroad. While the stock is valued well in terms of being at 52-week highs and all, I think it will continue to do well. The momentum will be on. Wouldn't be surprised if it starts doing about 15-20% kind of a move even from here on, given the fact that nobody's going to be selling it with this clear visibility. So among the FMCG pack, we've spoken about how Tata Consumer has started becoming much more pervasive in that sense, and that's why the premium valuation will continue.
Okay. I actually want your thoughts also on HCL Tech and Wipro, right? Both came out with numbers that beat street estimates. But before that, on Tata Consumer itself, we had the management, Sunil D'Souza, who's the MD and CEO at Tata Consumer. It was a very interesting discussion. He told Mangalam that they are expecting a high double-digit growth from the Capital Foods acquisition over the next few years. Here's a small snippet of that conversation.
From a brand perspective, now with these two coming in, I have all the cuisines to appeal to the Indian consumer. The Sampan appeals to the Indian taste, Smith & Jones is Western, and Ching's Secret, I would say, right now it is mostly Desi Chinese, but can probably go Oriental. So I've covered the entire plethora of cuisines that an typical Indian would have, and that plays perfectly. Strategically made sense. I can say that we are going to grow aggressively on the top line. Define aggressive as high, strong, double-digit growth, right? And EBITDA would be significantly accretive to our portfolio. So we would see a significant increase in the EBITDA margins for ourselves. I would say significant change in the growth trajectory of TCPL with these brands and EBITDA accretive. 400 basis points from trade margin is a given because that we know the number from this thing. The integration team now will go to every single minute detail and then draw up the map. We do expect significant amount of synergies to come out, given that they were, as I said, they were operating subscale.
Okay, in-depth interview coming up there. You can catch excerpts of that exclusive conversation all day today only on CNBC TV18. But back to our discussion with Prakash Diwan. Prakash, on HCL Tech, right? The revenues and margins were a beat, and there is now some momentum coming back in the IT space. Would you recommend buying into HCL Tech now?
So Surya, it's always a challenge when you kind of buy something which, and today, of course, it's going to open up, gap up, and people might start having doubts on that. But if you believe that within IT, things could start kind of looking positively for the next few quarters because of the start of the new year, and some of the TCVs could consolidate and cement themselves. Definitely, all the four players make a lot of sense. HCL Tech seems to be much more aggressive. They found their mojo back in terms of what they are always been good at doing. And remember, HCL Tech, in spite of whatever valuation it stands at, is still lesser than Infy and TCS in terms of a PE multiple. And on the FY25 basis, in fact, it could probably be more attractive than some of them. So from that perspective, yes, it makes sense. But do you have enough meat on the bone in terms of buying it at this point? you'll probably have to wait for better dips to buy and really make money. But at least very clearly, those who own it, those who hold it, will find it extremely easy to kind of now decide to continue holding it till kind of, the next couple of quarters throw some more pleasant numbers, surprises up. But, valuation-wise, it's definitely in a very good comfort zone. There's not much of a stretch that I can see from the FY24 and FY25 valuations.
Got it. Prakash, so with IT, I mean, if you own some of these names, hold on, right? Things are getting better.
Oh,
Degrees
absolutely.
may vary, and that debate will continue. But maybe we've seen the worst.
Yeah.
That's the common theme. Reliance, Prakash, that was the other, the second leg of the market for the market. Incrementally, what are the triggers?
So, Prashant, interestingly, Reliance has, the biggest impulse in terms of re-rating that is likely to come is going to be from the O2C business. It's within the Reliance stable, it's the unsung hero. We've already seen how retail has galloped ahead of the others. And from the DMart numbers that came in, some of the other ground realities that you start kind of dissecting, you start getting a feel that even retail will probably see some very strong growth continue even in the December quarter. So I'm very excitedly waiting for the numbers for Reliance, because all these three engines are going to be revving up very well. And now telecom is at a juncture where very clearly it could be Bharti which flags off domestically in India a price hike, but Reliance Jio will of course follow suit. And with the kind of digitization and all of that, kind of the consumption pattern that is going on data, I think Jio also will start getting to be benefited much more than what it has in the last. In fact, Jio has not been valued richly for the last many quarters, given the fact that people expected it to only do well when the price hike actually takes place. And that is getting more and more imminent. And of course, the news flow that is around, them getting to be looking at a global foray with the first acquisition overseas makes a lot of sense. I mean, Bharti tried that out in a market which was a bit immature. What Jio is talking about in Sri Lanka seems to be a much more safer bet and a much more manageable size in terms of that. So there could be very clear triggers from the oil and gas business. There could be very clear re-rating that would continue for the retail business given the scale that it has mopped up. And so at 2,700, if you ask me, Reliance is probably out of the Nifty one of the most undervalued stock. But then it has always been the case. Reliance takes time to consolidate, to grow. But the moves in Reliance, from 2,100 to 24, 25, 2,600 has been pretty good. But then it's consolidated in that zone. I think the next move will take it to about 3,200, 3,300 very soon. So that's the kind of move that you could look for. And of course, gear up for some sort of announcements during the year, maybe during the AGM later this year, where you'll start seeing a calendar or a timeline on the global IPOs or some sort of IPOs coming out of the businesses. So pretty exciting times, and I think it's carrying the weight of the Nifty's move beyond this 22,000, which seems very imminent.
Prakash Diwan is still sitting by with us, so let's get a word in from him. Prakash, I wanted your thoughts on Polycab. There's a Goldman Sachs report this morning which talks about how, at this valuation, Polycab is looking good, and they have a high target price as well. After all that, after all the dust has settled, do you think this overhang will still remain on the stock, or do you think it's a good time to be buying into Polycab? Prakash, I can't hear you. I think you're on mute. If you can just unmute yourself.
So I'm saying,
Go ahead.
So it's quite interesting at, the junction which Polycab sits at. It's very interesting if you actually believe that the business is good, has been good, continues to be good, given so much of work that's happening within the sector. You will see a change in mindset for a lot of the players in this business. And you'll probably see all these corporate governance issues getting over at some point in time, because the learning overall in the sector is that you don't do things which hamper your not just your reputation, but also the perception around the growth in the top line and the margins. Now, imagine if Polycab continues to show growth and all of this, which I don't know whether that's true or not, but all the purported sales that were not captured on the books, if that was to be captured on the books, things could look so different. And that goes for a lot of the other players in that segment, by the way. So I believe it's a very interesting lesson for everybody in that space. Wherever this potentially could have happened, people will make sure that there are no mishaps of this type in their own businesses. Polycab might take some time to struggle to get back that confidence from people, because when it started falling at 60,000 crore market cap, it was pretty richly valued. So that the trigger was essential in terms of rationalizing some of the rich valuations. But if you want to look at Finolex Cables, I mean, that's another company in the same business. Of course, it might not have the same kind of a reach and brand recall, but that space is going to be continued. That FMEG and the cables and wire space is going to be very interesting. And I would suggest people look at it differently now, because all of them will report some very decent earnings growth, given what's happened and what they've learned from this episode. So what the damage to Polycab could probably be an advantage to some of the other people in terms of the learning. And that's where I'm not saying it's evident that everywhere this is happening, but if there was any potential of those things happening, it probably now gets obviated.
Okay. All right, Prakash, we'll leave it there. Good speaking with you as always and getting a sort of opinion on a whole host of subjects. Thanks very much for being here on the program.